In this video, I will be doing an in-depth analysis of one of my favorite grocery stores, which is the Kroger Company, ticker symbol KR. As a Cincinnati resident, Kroger is near and dear to my heart. Founded in Cincinnati in 1883, Kroger is one of the largest retailers in the country with approximately 2,800 stores in 35 different states. They mostly sell food-related products, but they also have a wide variety of other household items such as cleaning supplies, toiletries, and pet supplies. They also have gas stations at about half of their grocery stores and pharmacies at about 3/4 of their grocery stores throughout the country. In the fiscal year 2021, Kroger produced revenues of $137.9 billion. And recently in October 2022, Kroger announced that they had entered into a merger agreement with Albertsons for $24.6 billion. And I personally don't know a ton about Albertsons. I've never been to one, but most of their stores are in the western half of the United States. So that could be a good opportunity for Kroger to diversify and expand further throughout the country. Now that we know about Kroger's business model, let's take a look at their most recent earnings report to see how they are performing. Their most recent earnings are from the third quarter of 2022, which ended on November 5th, 2022. In that quarter, total sales were $34.2 billion, which was compared to $31.9 billion in the third quarter of 2021. And excluding fuel, since those prices fluctuate a lot, sales increased 6.4% compared to the third quarter of 2021. Net income for the quarter was $398 million, which was actually a decrease of about 18% from the third quarter last year. But net income for the first 3 quarters of 2022 totaled $1.8 billion, which was an increase of 64% compared to the first 3 months of 2021. And it should be noted that 2021's net income was down a fair bit compared to 2020, so maybe it isn't the best point of comparison, but seeing that growth there is good for sure. And overall, I think the earnings report was fairly solid. Nothing really spectacularly good or bad to report there, but we'll have to wait about a month more to see how Kroger fared in the full year 2022. It's also important to analyze the overall financial health of a company, which is why we are now going to take a look at Kroger's balance sheet. Currently, they have about $900 million in cash on hand, which is down by about 50% from the beginning of 2022. And part of the reason for that is that they are working on reducing debt in preparation for the Albertsons merger, which is a good thing for sure. Total current assets are up over $1 billion to $13.4 billion, but total current liabilities are also up about $1 billion to $17.7 billion, which is actually more than the current assets. And this isn't really the best thing to see because it means they don't have enough short-term assets on hand to pay off all their short-term liabilities. Debt right now is separated into $788 million that is due within the next year and $12.4 billion that is due in more than a year. And this gives Kroger total debt of $13.2 billion, which is a lot more than I like to see. I generally like to see debt being no more than 2 times a company's net income. And in the case of Kroger, their net income over the past 3 years has averaged around $2 billion, which means their current debt load is about 6.5 times their net income, which is definitely on the higher side and definitely higher than I like to see. And if the Albertsons merger does go through, they will end up taking on about $4.7 billion of debt from Albertsons as well. So overall, I think the balance sheet could use some work, and I think it's one of the weaker points for the Kroger company. Taking a look now at the dividends as well, Kroger currently pays a yield of about 2.3%, with a very low payout ratio of 22.7%. They also have a fantastic dividend growth rate of almost 14% over the past 5 years, and a fairly strong dividend history, having increased the dividend for the last 16 years consecutively. And it seems that the dividend growth is pretty sustainable over the last 10 years. Their earnings per share have grown at about 11.5% annually. So the dividend growth might not be able to stay, at that 14%, but I think there's a good chance that it could stick around above 10% for at least the next few years. Taking a look at some valuation metrics, the first thing we're going to use is the PE ratio, which is currently sitting at 14 for Kroger, and their average PE over the last 10-ish years has also been about 14, which is a pretty good sign to see. And we can also look at this chart of earnings growth, and we can see that earnings is generally kind of choppy, but generally it's in a pretty strongly upward direction with an average growth of 11.5% annually, like I said before. And when we compare Kroger to their peers, the picture gets even better. Currently, the consumer defensive sector has an average PE ratio of about 22, while the retail defensive industry has an average PE of 21. So Kroger definitely looks undervalued compared to their peers as well. And as always, I performed a discounted cash flow calculation for Kroger, and from that I came up with a fair value of the stock of $56.30. And when I applied a 10% margin of safety, I got a buy price of $50.67, which is actually above the current price of Kroger stock of around $44, and that generally indicates that Kroger could be undervalued. As a consumer, I really like Kroger a lot. They have good prices on their food and a good rewards program that helps me save on gas as well. And as an investor, they have a business that is growing both revenues and earnings at attractive rates over time. They have also done a fantastic job of repurchasing shares. As we can see from this chart here, shares outstanding have decreased from about 1.3 billion in 2009 to less than 720 million in 2023, which is a 44% decrease over that time period. What this means is that if you owned hypothetically 1% of the Kroger company in 2009 and just sat there and did nothing and let Kroger repurchase these shares, that stake would now be worth about 2.6% of the company in 2023, which is an awesome trend for current and future shareholders. A note here though is that Kroger actually did suspend their share repurchase program at the end of 2022. Basically, they want to focus more on deleveraging the business in preparation for the Albertsons merger, which I think is a good idea. Despite the less than ideal balance sheet, I think Kroger is, fairly valued and a little bit undervalued right now. I don't own any in my dividend portfolio right now, but it is one I will definitely keep an eye on and may consider adding in the future, just because I'm pretty familiar with the business. I'm a consumer for sure, and they have produced solid results in the past, and they look poised to be able to continue producing those results in the future. But I would love to hear your perspective on Kroger stock in the comments down below, and let me know if you have any thoughts on the Albertsons merger or whether or not the stock is undervalued right now. If you are interested in hearing my thoughts on another large retailer, check out this video up here that I recently made on Costco stock. Thanks for watching, and I'll see you all in the next one.